it's a new topic. We have very less precedents. Of course, we have precedents in context of section 271(1)(c). Whether those judgments would be relevant for the purpose of section 270A or not, that is something which we'll have to discuss today. Two, since it's a new topic, there would be wide range of issues which may arise, wide range of interpretations which may arise, and therefore it will be prudent for all of us to have a good discussion rather than it being a monologue. So I would also invite all the members to please contribute in today's topic. Let it be a two-way discussion so that we can learn more. To the best of my knowledge, I have raked out some of the issues. Let us have some discussion on that. In between, if there are some other ideas which, or there are the participants are having any issues, they can please discuss openly and we can have a good discussion. With this, let us start with section 270 capital A of the Income Tax Act. Prior to section 270 capital A, we had section 271(1)(c), which dealt with penalty for concealment of income and furnishing inaccurate particulars of income. This was the penalty which was levied wherein the course of assessment proceeding, if any addition was made, then one was subjected to penalty, and the penalty could be initiated for two charges, either of the two charges. One was concealment of income and the other was for furnishing inaccurate particulars of income. Law was quite settled. People were aware what is furnishing inaccurate particulars of income or what is concealing the income. But the government thought otherwise. They wanted to have something new, something fresh. So they came out with section 270 capital A with effect from Finance Act 2016, applicable from AY 1718. The object behind such insertion was circular number, as can be deduced from circular number 3 of 2017, to remove discretion. In other words, to remove corruption, because there the assessing officer had a discretion to levy penalty from 100% to 300%. I had very rarely seen somebody invoke penalty at 300%. As such, the AOs were only levying penalty at 100%. I don't know why was there a need to remove discretion in this matter. And in any case, if the AO levied penalty at 300%, the appellate authorities were very generous to reduce it to 100%, if not delete it completely. So therefore, I don't know why this was apparently not needed in my view. And the second object was to bring objectivity, certainty, and clarity. And if you go through the provisions of section 270 capital A, according to me, this has not been achieved. Rather, a reverse scenario has been achieved because there are a lot of lacunas. It's a badly drafted law in my view, and therefore it's prone to a lot of uncertainty, interpretation issues, and therefore let us go ahead. Before going into section 270 capital A per se, some of the basic concepts applicable to penalty proceedings. The penalty provisions have to be strictly construed. If you don't fall within the term and language of the statute as it stands, or if there is any ambiguity, or if there are two interpretations possible, the courts have always taken a view in favor of the assessee has to be taken, or penalty cannot be imposed if you don't fall strictly within the letter of the law. In the matter of whether a particular item of income is taxable or not, the Supreme Court in case of vegetable products 88 ITR 192 has held that if there are two view in favor of the assessee should be preferred. In context of penalty as well, it will apply with more force, but in context of penalty also, we have a Supreme Court judgment CA Abraham versus ITO 41 ITR 425. Where they say that in interpreting a fiscal statute, the court cannot proceed to make good deficiency if there be any. Court must interpret the statute as it stands, and in case of a doubt, in a manner favorable to the taxpayers. So the first point which I am driving today is, since there are a lot of issues or lacunae in section 270 capital A, because of one or the other provisions, if you are not liable to pay penalty, so be it, you cannot be levied with penalty. You cannot be saddled with penalty. 2. Penalty proceedings and assessment proceedings are distinct proceedings. Mere making of addition in the assessment order would not justify levy of penalty. We have the Bombay High Court judgment in 204 ITR 462 CIT versus Dharan Gandhi. And we have the Supreme Court judgment in case of T. Ashok Pai versus CIT 292 ITR 11, where they say the same thing, that just because an addition has been made in the assessment proceeding would not automatically justify revenue to impose penalty. Now, if we contrast the judgments with the provisions of section 270A, subsection 2 and subsection 3, you will realize that underreported income has been defined to be difference between your assessed income and your returned income. So per se, the difference is your underreported income. They have now inserted this concept of wholesale penalty. If there is a difference between the underreported, the assessed income and the returned income, the entire amount is deemed to be your underreported income. Of course, subject to certain exceptions. So per se, the section 270A, subsection 2 and subsection 3 are in direct contrast with the judgments of the Bombay High Court and Supreme Court, where they say that merely making an addition would not justify levy of penalty. This would certainly assist in the new law as well, in my humble opinion, which we'll see today. Yes, sir.
It is assessed income.
Actually, there's a difference between the 140.
141,
yes.
yeah.
We'll come there. We'll come there. Yes, yes.
Correct.
And lastly, onus is always on the department to prove that the assessee has either underreported the income or misreported the income. Earlier, the onus was on the department to prove that there is concealment of income or furnishing inaccurate particulars of income. In the case of penalty, which are in the nature of quasi-criminal proceedings, the courts have held that the department has to prove that, or the department has to meet the charges. And therefore, at least in the context of misreporting of income, the duty or the onus of the department would be to prove that the case falls within one of the limbs specified in section 270A subsection 9. And if it is not proved, then there is no misreporting of income. Insofar as underreporting of income is concerned, there may be two views, that onus is not on the department because underreported income is the difference between your assessed income and your income determined under section 143(1). But still, I would say the department still have to make out a case that there is an underreported income if we go through the provisions of section 270A subsection 1, which is discretionary in nature, and therefore still I would believe that department will still have to make out a case that there is an underreported income. At this stage, let me also bring out the judgment of the full bench of the Bombay High Court in case of Mohammad Farhan. The citation is not there. It is in context of notice under section 274 read with section 271, where the issue before the Honorable Bombay High Court was, in the show cause notice, they have not struck down the irrelevant part, whether the penalty is for concealment or whether the penalty is for furnishing inaccurate particulars. Though in the assessment order, it was specifically stated that the penalty is for one of the charges. In such context, the Honorable Bombay High Court full bench decision in case of Mohammad Farhan has held that notice is bad in law because you have not stated what is the charge on which you want to levy penalty. That will also have a role to play in the current section as well. The point why I am raising that judgment at this stage is the court says not only is the onus on the department to prove the charge, but it should specifically mention the charge in the show cause notice, for the onus is much higher, even at the stage of issue of show cause notice and then at the time of passing of the penalty order. So these are the three concepts. A, strictly construed. B, merely an addition has been made does not mean that penalty has to be levied. And 3, onus is on the department. With this, now we go to the provisions of section 270A subsection 1. We will read the section. Sharmaji has, I think, informed the members to have the copy of the act. So we'll start with section 270A subsection 1. The assessing officer or the commissioner appeals or the principal commissioner or the commissioner. 4 authorities have been given power to levy penalty. I can understand assessing officer. I can also understand commissioner appeals. I don't know why they have inserted the word principal commissioner or commissioner. I have never seen principal commissioner or commissioner levy penalty. At the most, I have seen principal commissioner invoking section 263 because AO has failed to initiate penalty. I have seen such type of cases, but I have never seen principal commissioner or commissioner levy penalty. Even if we go one step further, may during the course of any proceeding under this act direct that any person shall be liable to pay penalty. So it is only during the course of any proceeding under this act. There are no proceedings which are pending before commissioner or principal commissioner at any point of time. I don't know how can they invoke penalty in absence of any proceeding pending before commissioner or principal commissioner. 263 is a revision proceeding. Such proceeding cannot be used to levy penalty. It can be only used to revise an assessment order, nothing more and nothing less. So therefore, per se, commissioner and principal commissioner, I am not sure whether they can levy penalty or not under section 270A. These authorities were also empowered to levy penalty under section 271(1)(c). But again, there also, I don't know, I have not seen them levy any penalty. There can be a reverse argument because section 270A uses the word principal commissioner or commissioner. Therefore, a principal commissioner in the course of section 263 revision assessment can direct the AO to levy penalty. There can be this reverse argument which one will have to test.
They must have done it possibly because in future if they want to give any
Power to commissioner, or
then
probably
they don't have to amend this. That's why.
yes, and the commissioner has a power to make an assessment or to take the powers of the assessing officer back to distribute amongst joint
That is
commissioner,
only
additional
for-
commissioner.
That is only for the distribution of the work.
Distribution, yeah.
Not
But he can take it
that is administrative power,
Administrative power.
not the assessment power.
So I don't know how principal commissioner or commissioner.
NGO માં ત્યાં હોય છે commissioner, they are taking assessment.
It's ultimately the assessing unit. Ultimately, it's the assessing unit. We don't know behind who is doing it. It should not be the commissioner stage.
So therefore, really speaking, principal commissioner or commissioner cannot directly levy penalty. But since their name is mentioned in section 270A, they may use this while directing under section 263 to the AO to initiate penalty for either underreporting or misreporting of income. That is only the way how I can interpret this insertion of principal commissioner or commissioner. The second most important word used in section 270A is the assessing officer or the commissioner appeals or the principal commissioner or commissioner may direct. The word used is may, which means it's a discretionary power. It's not that in each and every case they have to levy penalty, though section 270A subsection 2 and subsection 3 defines underreporting of income to be the difference between the assessed income and the income determined under section 143(1). Since they have used the word may in section 270A, therefore it's a discretionary power. As a result, he may either not initiate at all. Though there is a difference between the assessed income and income determined under section 143(1), he may choose not to initiate on any particular issue. Or he may, after initiating, not levy the penalty, though your case is not falling within the exceptions prescribed under section 270A subsection 6.
Can we say the may is for that only then?
Yes, yes.
Because there is a discretion.
There is a discretion, yes.
And because there is an exception. So not in all the cases, it's not a compartment, tight compartment, that in all the cases,
I have to
when
follow
there is
the
a difference, you have to
Levy
levy.
penalty,
So
yes.
it's a may is there because of that exceptions.
Yes. No, not of the because of the exceptions.
Can we-
Exceptions say that this is not underreporting at all.
Yes.
If it is not underreporting, A cannot levy penalty.
Cannot levy.
So he cannot levy penalty.
Therefore, it will not fall in May.
Okay, okay.
The argument can be otherwise then. Only in those cases only it cannot be levied. But in other case,
As we go along, it says shall be liable.
Correct. May direct that he shall be liable to pay. May direct that he shall be liable to pay. But the use of the word may is very crucial, and therefore, based on the use of the word may, I again fall back to the first fundamental principle that mere making of addition would not justify penalty. And the second fundamental principle that onus is still on the department to prove the charge, especially misreporting. Because of this use of the word discretionary. Of course, discretionary, we have judgments. The CA Abraham versus ITO 41 ITR 425 Supreme Court, as well as the judgment of Supreme Court Hindustan Steel Limited versus State of Orissa 83 ITR 26, where the Supreme Court has very beautifully written that whether penalty is to be imposed for failure to perform a statutory obligation is a matter of discretion to be exercised judicially and on consideration of all relevant circumstances. Even if minimum penalty is prescribed, authority will be justified in refusing to levy penalty where there is a technical or venial breach of the provisions of law. So all these judgments, according to me, will be applicable in the context of section 270A of the Act. Moving further, now section says, may during the course of any proceeding under this Act direct that any person shall be liable to pay penalty. Now, I am really not able to digest the words of section 270A. They say, may during the course of any proceeding direct a person to pay penalty. Literal meaning is, in the course of assessment proceeding itself, he has to levy penalty. And if you look at the original finance bill, when it was inserted, the wordings were, may direct a person that he shall be liable to levy penalty. It was in the Finance Act that they introduced the word during the course of any proceeding.
So can someone take an argument in an appeal against the penalty order? Is that this was not levied during the assessment proceedings and hence the penalty order is pending?
You can take this argument, but it is subject to my further discussion on this. So the literal interpretation of may direct during the course of any proceeding that a person shall be levied to penalty is that he should direct in the course of assessment proceeding itself that a person should levy penalty. If we compare the wordings of section 270A with section 271, there the wordings are, if the AO or the commissioner appeals or the principal commissioner or the commissioner in the course of any proceeding under this Act is satisfied that any person has concealed the particulars of income or furnished inaccurate particulars of such income, then he may direct such person, that such person shall pay by way of penalty the following amount. Now, if you compare the wordings of section 270 capital A with section 271, in 270 capital A, the wordings are, may direct during the course of any proceeding under this Act that a person shall be liable to pay penalty. But in 271, they say, in the course of any proceeding, he is satisfied that any person has concealed the particulars of income. So 271 mein requirement tha, in the course of assessment proceeding, he has to just record a satisfaction of concealment or furnishing particulars of income. So even if I compare 270 capital A with section 271, again the meaning flows out that it is only in the course of assessment proceeding he has to levy penalty. But this does not appear to be the correct interpretation. In my humble opinion, it has to be interpreted harmoniously with the other provisions of section 270A. Please come to section 270A, subsection 3, explanation. For the purpose of this section, preceding order means an order immediately preceding the order during the course of which penalty under subsection 1 has been initiated. So they have used the word under subsection 1 during the course of which penalty has been initiated.
Yeah, but where is the preceding order?
Which is there in subsections. We'll go to subsection 3. The crux is preceding order means an order immediately preceding the assessment order, and in the course of assessment order proceeding under section 270 capital A subsection and has been initiated. They use the word initiated. Preceding order means an order immediately preceding the order during the course of which the penalty under subsection 1 has been initiated. So my focus is on the word initiated. As well as if you come to section 270 AA, subsection 3, which deals with immunity from penalty, AO shall, subject to fulfillment of the conditions specified in subsection 1, and after the expiry of period of filing the appeal as specified in clause B of subsection 2 of section 249, grant immunity from imposition of penalty under section 270A and initiation of proceedings under section 276C or CC of the Act, where the proceedings for penalty under section 270A has not been initiated under the circumstances referred to in subsection 9 of said section 270A. Again, this 270 AA application has to be made within the period of 30 days from the date of the receipt of the order. And they use the word that you can make an application only if penalty is not initiated for misreporting of income. Therefore, if I read harmoniously section 270A3 explanation clause A, 270 AA subsection 3 and 270A subsection 1, the interpretation flows that the words may during the course of any proceeding direct any person shall be liable to pay penalty should be initiation or satisfaction of penalty in the course of assessment proceeding. Of course, this also is the interpretation which will arise while we interpret section 275, which deals with limitation for levy of penalty. But the limitation period is 1 year from the end of the year in which the order is passed, or 1 year from the end of the year in which the order of the appellate authority has been received. So if the outer limit for passing a penalty order is 1 year from the end of the year in which the order is passed, or 1 year from the end of the year in which the appellate order is received, then section 270A subsection 1 cannot be interpreted to mean that they have to levy penalty along with the order, which is the case in the case of GST proceedings. They levy the penalty in the order itself.
Okay.
Yes, they levy the penalty in the order itself. And we have a Bombay High Court.
Similar proceedings or concealment sort of.
So there is one order in GST, service tax and excise, where they levy, where they impose duty, impose interest, and impose penalty in the same order. That is the course in the indirect tax proceeding. We can ask them to.
So maybe that would be the intention.
Well, it doesn't flow from section 27.
So they have not taken care. But this now becomes redundant. I understand 270 AA will become redundant otherwise.
Yes.
And as far as the limitation is concerned, it's a limitation. Beyond that, you cannot go.
No.
But within that, then if you pass an order levying the penalty during the course of assessment, then it is within that only.
Yes. But maybe the other interpretation is this, that the section does not really speak about recording of satisfaction for levy of penalty. This is the section which now means that they have to record satisfaction for levy of penalty. Suppose
Where it is required.
may direct, uska interpretation is that they have to record a satisfaction. They have to initiate in the course of assessment proceeding. If I compare section
clause A, then it's just a difference where you don't require anything. It's just mechanical.
No, but then it's a discretionary power. A 270A6 is there.
6 is there.
They may not initiate penalty for some issue.
Exception.
They may not initiate penalty at all. So therefore, my humble submission is 270A direct during the course of any proceeding need not mean that it should be levied in the course of assessment proceeding, but it should certainly mean that they should initiate and record a satisfaction in the course of assessment proceeding in the assessment order. We have a Bombay High Court judgment in case of Skoda Auto Volkswagen Limited, where the SSC had challenged the levy of penalty immediately after the assessment order was passed. Court said that the outer limitation under section 275(1)A is after the penalty order has been received, and therefore what is the hurry in passing the penalty order, which again throws the light that it did not be levied along with the assessment proceeding.
There's one question online from Mr. Jogish Mehta. I will read the question. Can the assessing officer initiate penalty proceedings under section 270A if a claim for an expenditure is made by the SSC in the assessment proceedings under section 143(3) of the Act, and the claim has not been allowed in the scrutiny proceedings? As the claim was not made in the return of income filed under 139(1), the income assessed in the assessment order equal to the returned income. So he's saying that he's not made claim in the return; he directly made claim in the scrutiny proceedings.
So I think the assessed income and the income return under 149 will remain same, and therefore there is no underreporting of income. Yes.
But even on the merits, the claim will not be allowed because of the coercion.
Sorry?
Even on the merits, the claim will not allow the claim on the basis of
There
coercion.
are
Goets India.
That is for the appellate.
That is the appellate stage.
But
That is appellate
because of the
stage.
coercion
Where it is
assessment proceeding, they will not allow.
So my submission is Goets India has to be now interpreted in light of Citizens Charter. And Citizens Charter say that he has to determine the correct income.
Taxpayer charter.
taxpayers charter under section 140A, 140 something.
Yeah, now that is in the statute.
In the statute.
Otherwise it was not, but then there was a circular also on similar
No, but now
lines.
it is a statute.
Even after the circular, this judgment is there. So I don't.
Even 143.3 wording itself, so wordings also say that after considering everything during the course of assessment.
No, I agree. I agree. That is subject to Supreme Court judgment in Goetz India. But now, since after Goetz India, we have the Citizens Charter under that section, one can make a claim.
I made that attempt also, but again the.
वो तो नहीं करेंगे, वो तो Goetz
Yeah,
India.
yeah,
I made that attempt. It's a taxpayer charter.
Ajay, you have done that.
वो तो नहीं बोलेंगे. It's
No, but the
subject
good
to-
point is that, as Dharan said, now it's part of the statute, which earlier it was not a part of the statute,
Statute.
it was outside.
But DK, you can take it in 264 or 249.
No, I am so extensively
264.
relying on this.
100%. 264 mein you can raise new claims.
Provided benefit. But once it is already appealable, then to
No, 264 is there. 264, according to me, is the
then you don't
section
go for
which
appeal,
is-
you go straight away in 264.
Taxpayer charge is 190.
99.
But
264 is a section which, according to me, should have been used more widely, but it is not used more widely. It is a
Yes.
very beneficial section because of the judgments which you have in context of section 264.
who's to be used? So SSC
SSC
can use it only if there is an ultimate end of the tunnel. You see some light,
Yeah.
but here you don't see the light.
No, the
The
point is,
commissioners don't act on that.
I
That's
know
the
that.
reason.
I know. The commissioners don't act on
And
that.
then the only option is you have to go to the High Court.
High Court, but then they give a finding that you give a finding on merits. They have to entertain your claim. The ultimate
For
thing
that
is
also you have to go to the High Court.
High Court.
What he is saying, yeah.
So
Go
it's
away.
chalo
That's a
better
sad
appeal
part.
mein jao.
that's a sad part, but yes.
The 264, I'll just share one experience. It was pending till the last day that the COVID came, then 1 or 2 year extension came. The last week of the extension, commissioner made SSC, assessing officer do the rectification and dismiss 264.
But
But
relief
ultimately,
में, yeah,
relief
they-
में,
yeah,
बस हो
they
गया.
will not allow.
Is achieved.
Yeah, they ask SSC why you have not rectified it. Because
उसका रिकॉर्ड खराब नहीं होगा, ये का रिकॉर्ड खराब होगा. बस. I dismissed 264. That is his record.
yeah.
Okay. So again, Mahendra Bhai raised this one argument that what is the need for recording satisfaction, because the underreporting income is difference between the assessed income and the income determined under section 143(1). But as we have already discussed, A, it is discretionary, merely making of an addition cannot lead to penalty, and may direct would mean may initiate or may be satisfied in the course of assessment proceeding. Therefore, 270A subsection 1. If the department says that no, there is no initiation or satisfaction, then our argument is that as per section 270A subsection, you had to levy penalty. You have not levied penalty, you have missed the bus.
Yes.
Then they say,
So
"Nahi, nahi,
that's
nahi."
what he said. Now, why this cannot be a point of an appeal?
Therefore, they will fall back to the argument that, okay, we have to record a satisfaction or we have to initiate the penalty in the course of assessment proceeding. We have to give some meaning to the word may during the course of any proceeding direct.
Generally, they are giving assessment order, they are initiating.
No, karte.
Also.
But section strictly does not require. Section strictly does not require.
Section says that in the proceeding itself you should pay.
No, but then that
We
will
have
be
seen
seen.
so many
That
assessment
Dharan has
orders.
explained.
Yeah.
Also, there is a judgment of the Supreme Court in case of CIT versus Jai Lakshmi Rice Mills, 379 ITR 521, in context of section 271 capital E. I think that was dealing with that loan, cash loan something.
Yeah.
Which does not require recording of satisfaction in the assessment proceeding. But the Supreme Court said that since you have not recorded satisfaction in the course of assessment proceeding, penalty is to be deleted.
Oh. So similar to 69 SS also would be the same rules.
Therefore, even if a particular section does not say so, that you have to record a satisfaction in the course of assessment proceeding, but the Supreme Court says you have to record a satisfaction in the course of assessment proceeding, and if you don't record a satisfaction, penalty has to be deleted.
Which is that judgment?
379 ITR 521. Jai Lakshmi Rice. Okay, we move further. May direct during the course of any proceeding under this act direct. So the word used is any proceeding. Now, what do you mean by the word any proceeding? It has to be firstly of the very same assessee. It cannot be of some different assessee. Further, it has to be of the very same year. It cannot be of a different year. He cannot initiate penalty for AY 1819 in assessment for AY 1920. So that is a very well settled law. We don't need judgment for this. And since it refers to any proceeding in case of the assessee, according to me, it should be an assessment proceeding or a tedious proceeding. And therefore, I don't know how Principal Commissioner or Chief Commissioner of Income Tax can levy penalty, except the discussion of Section 263. If we move further, may during the course of any proceeding under this Act, direct that any person who has underreported his income shall be liable to pay a penalty in addition to tax, if any, on the underreported income. Now, they have not used the word misreported his income in Section 278 subsection 1. Is there a consequence because they have not used the word misreporting of income? I think it's a debatable issue, but I would more tend to lean in favor of the department, because misreporting of income is in consequence of underreporting of income. It's only if it's underreporting of income, then only it will lead to misreporting of income. But one can still argue that misreporting of income falls a different category per se, and therefore you have to levy penalty only as Section 270A subsection 1, which is the main charging section, I would say, for levy of penalty. It uses the word only underreporting of income, and therefore misreporting is not covered, and therefore you cannot levy penalty for misreporting of income. Very hyper technical. I don't think it will be accepted in any court, because of bowling if you know misreporting का section 2 लेके आए हैं. Now moving further, I am done with Section 270A subsection 1. We move further. If there are any queries, I will be happy to take it up. Otherwise, we'll move further. Now, section is broken up into 4 parts, as I see. Section 270A subsection 2 says when underreporting of income. Section 270A subsection 3 says what is the amount of underreporting of income. Section 270A subsection 6 says this is not underreporting of income, the exclusions, the exceptions. And Section 270A subsection 10 deals with computing tax on such underreporting of income. So there are 4 parts of the section. When underreporting of income, Section 270A subsection 2. How much income is underreported? Computation of underreporting of income, subsection 3. Subsection 6 is the exclusion from the underreporting of income. And subsection 10 is tax on such underreported income. If any of the 4 subsections fails to apply, penalty cannot be levied. These are the 4 major pillars on which penalty is founded. If you do not fall either in subsection 2 or in subsection 3 or in subsection 6 or in subsection 2, 3 and 10, then you are out of the ambit of penalty under Section 270A of the Act. This takes us to subsection 270A subsection 2. There are 7 clauses in subsection 2. A person shall be considered to have underreported his income if A, B, C, D, E, F, G. The first question is, are all the clauses mutually exclusive or not? The answer has to be yes. A person cannot fall in clause A and clause D together. Why I am saying this is because we'll see this in clause G, which deals with loss. So first and foremost conclusion is all the clauses are mutually exclusive. Therefore, if you do not fall in any of the clauses, you are out of Section 270A. Clause A says that income assessed is greater than income determined in the return processed under clause A of subsection 1 of subsection 143. I only want you to mark the word assessed. Clause B says income assessed is greater than maximum amount not chargeable to tax where no return of income has been furnished or where a return of income has been furnished for the first time under section 148. Income reassessed is greater than income assessed or reassessed immediately before such assessment. Please mark income reassessed. The question is, what if your income is reassessed for the first time?
Then
We will not fall in B.
B is income assessed. Only if return is not filed. If a return has been filed, it has been processed, but you are assessed for the first time under section 148.
No penalty because everything is exclusive.
no. See, here I think they're trying to say income assessed is 143.3.
But as you said, it is assessed only, no?
So
Because
assessed.
the intimation
So-
is not the assessment.
Yes.
Yeah.
Right. So it has to be reassessed. Means it's a all reassessment will be considered after assessment. So first time the example that you gave, that I filed my return of income, there has not been any 143.3 order. There is a reopening, and first time the assessment done is of
Under
under
147.
147. So in that case, it will be treated as a first assessment.
First,
I'll give examples.
Yeah.
I have filed a return of income. It is processed. My return has been selected in scrutiny 143. There is an addition. It falls in clause A. Income assessed is greater than income determined in the return processed.
Correct.
I have not filed my return of income.
Second example.
Second example. And they have taken up my case for scrutiny. Addition has been made. Income assessed is greater than maximum amount not chargeable tax when no return of income has been furnished. Third example, simpliciter. There is a 143.3 assessment done, and now there is a 147 assessment. The difference falls in clause C. Income reassessed is greater than income assessed or reassessed immediately before such reassessment. Now a case is 147 for the first time after return has been processed. Please read clause D. Amount of deemed total income assessed or reassessed as per the provisions of section 115 JB or JC, as the case may be, is greater than deemed total income determined in the return processed under clause A of subsection 1 of section 140. They've used the word assessed or reassessed. If they use the word assessed or reassessed under clause A, then first time reassessment is covered. Of course, the counter is section 2.7 defines assessment to include reassessment. But the rejoinder is, what was the need to include reassessed in clause D?
Clause D. What was it? Yes.
Then you are not giving meaning to the word reassessed in clause D.
Right.
And this also becomes crucial because clause F was introduced in Finance Act. It was not forming part of Finance Bill. Clause F is amount of deemed total income reassessed is greater than the deemed total income assessed or reassessed immediately before such assessment. Also compare it with clause G. The income assessed or reassessed has the effect of reducing the losses. So the first point, which I may think is a possible argument, is if your assessment has been done for the first time under section 147, under normal computation, not under MAT, then in that case, you have a chance to argue it does not fall in subsection 2. It has to be strictly interpreted since you're out of it. Or even if there is a debate it should be construed in favor of the assessee. And therefore, no penalty can be levied. So we have read A, B, C. Similar are the wordings of clause D, E, and F, but only in context of deemed total income.
So non-filer, first time filing return and assess income is same, no penalty.
Non-filer or filing?
Non-filer, because he is filing return in response to 148. Return income and assess income is the same. So there is no penalty.
No, they say
Maximum amount exceed.
it will fall in B. B में लिखा है
हाँ.
maximum amount not chargeable to tax where no return has been furnished or where return has been furnished for the first time under section 140.
You are saying is that you do not file the return at all, and there is a reassessment. Then no penalty.
No. You file a return, it has been processed, and now it has been assessed for the first time under 147. Then no penalty. Clause A. Now, similarly, clause D, E, and F. D says the deemed total income exceeds the deemed total income determined in return processed. B says the deemed total income exceeds the maximum amount not chargeable to tax where no return has been furnished or return has been furnished for the first time. And F says the deemed total income reassessed exceeds the deemed total income assessed or reassessed immediately before such assessment. Now, clause D, E, and F uses the word deemed total income. And they use the word assessed or reassessed. If I go to section 115JB, or for that matter 115JC, now the section runs into some 20 pages because of this Ind AS thing. Commentary bhi isse chota hoga. Notwithstanding anything contained in any other provision of this act, wherein the case of an assessee being a company, the income tax payable on total income as computed under this act in respect of any previous year relevant to the assessment year commencing on or after 1st day of April 12 is less than 18.5% of its book profit. Such book profit shall be deemed to be total income of the assessee, and the tax payable by the assessee on such total income shall be the amount of income tax at the rate of 18.5%. So deemed total income will arise only if 18.5 of book profit is less than the normal. Otherwise, there is no penalty on MAT, even if there is addition in MAT.
Yeah.
Deemed total income will arise only if your 18.5% of book profit is more than your tax on the normal income. Otherwise, there is nothing called as deemed total income. And if there is nothing called as deemed total income, clause D, E, and F will not apply.
So does it mean that if any addition is made and still
No, because it has no consequence, no. It has no consequence.
No, but consequence will
Consequence
be there as far as
MAT credit will arise
MAT
where
credit.
deemed credit आपका MAT हो रहा है, पर आपका normal में addition हो गया तो आपका MAT credit कम होता है.
But any addition is done
In the
example that you also gave,
Hmm.
even if that addition is done, then MAT credit will reduce, no?
MAT credit कब आएगा जब मैं MAT पे करता हूँ. तो difference between MAT and normal tax. अगर मैं MAT पे ही नहीं करता हूँ, उसमें वो कितना भी एडिशन करे उससे क्या फर्क पड़ता है. Suppose my normal income is tax on normal income is 100. MAT is say for example 20. MAT में उसने एडिशन करके now MAT comes to 40. But फिर भी I am paying 100 only.
I'm not likely to
So उसका कुछ भी करे, it has no actual relation with my tax payable. उसका MAT credit पे भी impact नहीं. MAT credit is a reverse scenario where my MAT is 100 and tax on normal income is 20, which they have increased to 40. Also note that, take an example, this scenario which we just discussed, I am assessed at rupees 100 on MAT. My normal tax is 20. They make an addition Now my normal tax is 40. But still I am assessed under MAT. No penalty. Because you have to compare deemed total income, assessed and deemed total income as per my return of income. If both remain same.
No, it has increased, no?
MAT same रहा. मेरा ये addition change हुआ. Normal वाला.
Normal tax.
So return income MAT only.
My MAT is 100 as per return of income. And tax on normal is 20.
Yes. Yeah.
Okay. Now they assess me. They make addition. Now normal tax as per Income Tax Act is say for example 90. But MAT remains 100. मेरा credit कम हो गया by 80, by 70.
But penalty.
Still there will be no penalty. All are mutually exclusive.
Yeah. For MAT, it
That is one. Second argument. If you are assessed at MAT, then your normal income is not your assessed income. There can be only one assessed income and one returned income. You cannot say that book profit मेरा इतना है, वो भी assessed है और normal profits इतना है, वो भी assessed. Not possible. There is only one income. There cannot be two income.
So to summarize, we can always say
Nalwa Sons is upheld now. Delhi High Court, which stated that the book profit remains unchanged. Whatever addition you make, ultimately, if you are assessed to tax at MAT,
yes, I was saying that.
That judgment has now been upheld. They do not want it to be upheld, but it has been upheld now.
Indirectly हो गया.
What will be the case if a normal income is been converted to MAT?
वो आएंगे, we'll come to that. It does not fall within the scope of penalty. Now, so we have discussed A, B, C, and D, E, F. Let me again come back to clause B. Income assessed is greater than maximum amount not chargeable to tax, where no return of income has been furnished, or return has been furnished for the first time under section 148. And if you compare it with A, income assessed is greater than income determined in the return processed under subsection 1 of section 143. अब उन्होंने exception clause B में सिर्फ 148 का रिटर्न डाला, 153A and 153C का रिटर्न नहीं डाला. For assessment year 18, 17, 18, 18, 19, 19, 20, 2021. All 4 years will be 153A and 153C. And 153A and 153C का return are not subject matter of processing under 143. 143(1) power to process is only in respect of income filed under 139 or in response to 142(1). तो प्रोसेस ही नहीं हो सकता है. अगर वो प्रोसेस ही नहीं हो सकता है, it will not fall in clause A. As well as it will not fall in clause C because I have furnished written of it, provided it is filed for the first time.
For the other penalty section is not there.
271 AAC is there only for the year of search.
AC.
Only for the year of search. उसके पहले वाला साल रहेगा तो it falls in 278. If I am right, then even the updated return, rectified return, and revised return are to be processed under 143(1) because they are return filed under 139.
What is rectified?
Rectified return is Mahendra by the concept that in response to 143(1) you can re-upload your XML file which is called as rectified return.
Okay.
In response to 143(1) intimation, you have 3 options. Either you agree, or you disagree with some remarks, or C, you upload the same XML file. That is called as rectified return because you upload the same return again, is what I understand. I am not.
No mention of that.
There is no mention.
No mention.
There is no mention. Actually it's a rectification application. It's not a return. It's a rectification application.
So after all, it will be again income determining 143, 163.
154.
Okay.
Keeping rectified return aside. Keeping rectified return aside. Is there a possibility where my return may not be processed at all?
If it is defective.
No, defective it is not honest in the eyes of law.
That's not a
Is there a possibility where my return may not be processed at all? I have gone through section 143(1). Section 143(1) states
many don't receive it.
Technically, many times they are not.
if there is any demand payable or if any amount is refundable, they are bound to issue 143(1).
Otherwise, they are not.
Otherwise, your acknowledgement is deemed to be 143(1). So, if any amount is payable or if any amount is refundable, and if time limit to process return under 143(1) has expired, then your return has not been processed, you cannot be penalized.
It's deemed process.
No, deemed process only in case where no amount is payable, no amount is refundable.
So then,
No, the acknowledgement is treated as your
I'll read that.
intimation.
I'll read that. It forms part of explanation to section 143(1). Clause B. Acknowledgement of the return shall be deemed to be the intimation in a case where no sum is payable by or refundable to the assessee under clause C, and where no adjustment has been made under clause B.
So will this not be treated as an
Only
intimation?
Acknowledgement of the return shall be deemed to be intimation in case where no
No
sum is payable by
Yeah.
or refundable to the assessee under clause C,
Hmm.
and where no adjustment has been made under clause B.
So it's a deemed process then.
So they have used
It
the
says it is deemed.
deemed
It
intimation.
says it
if
is
there is
deemed.
a refund.
Two conditions are fulfilled. No sum payable, not refundable, and there is no adjustment. Then it is deemed intimation. But if one of the condition is not fulfilled, they are bound to process your return. In this technological era, I don't think so. They will miss out in processing any return of income. But this is the loophole which one can exploit if something happens. Because sometimes I have heard that CPC का technical issue होता है in processing return. Therefore, they have to transfer the file to the AO to manually process the return.
Like
And if they fail to do it, then
This benefit
CPC
can be.
sometimes gives refund more than whatever you claimed, then they pass rectification to recover back.
Yeah.
ऐसा भी होता है।
हाँ,
CPC आजकल कुछ भी कर रहा है, वो different issue है.
Yeah, but they don't also. At times they don't also pass a rectification. Refund excess मिल जाता है, and they don't pass.
then they pass.
How you know in 100%?
I don't know, but मेरे केस में एक में आया कि
एक में आया है ना?
refund
So
मुझे याद
there
है,
are they don't
पता
pass.
चला मैंने वो उसमें
उसका
डाल
कुछ
दिया था कि I
technique
received refund more than.
आपने डाल दिया था.
हाँ, उसके दिया है।
CPC can do anything. We have one case where gross income is 2 lakhs, they have calculated tax on 3 lakhs.
I don't know, 143(1) is a very big issue now.
How can net income can be more than
Even
gross
139(9), we had earlier thought of making a representation. Difference between your receipts in form 26A and the gross receipts you offer it to tax, that is a reason to treat your return as defective return.
I have 150 appeals only on the FTC, not the work. Oh, 150 appeals.
Foreign tax rate not allowed. अभी मैंने
That's
एक
because you must not have uploaded that form ना. 68 के क्या?
67.
67.
नहीं तो वो होता नहीं है because जब तक वो country का final नहीं होता मेरा return तो मुझे है नहीं. Now they have extended in
no, I argued this before the tribunal in the last week that you don't have power under 143(1) to disallow my foreign tax credit, to disallow my TDS credit. Only power you have is to adjust my income and loss. 143(1) is adjustment of income and loss. वो कंप्यूट होने के बाद tax liability जो भी हो तुमको accept करना पड़ेगा.
But there are better than that now. There are several direct decisions.
Tax liability accept करना पड़ेगा ना?
Tax liability and the relief claim. You don't have power to make adjustment. The limited power you have to make an adjustment is to compute my income and loss.
हाँ.
After computing my tax liability, what reliefs or what rates I am taking.
So then there are other provisions to give you credit, no?
143(1) में नहीं है.
नहीं, but tax credit के लिए provision तो है ना?
But 143(1) में नहीं कर सकते. तुम 143(3) करो ना.
There are better arguments, including Bombay Tribunal in Sonakshi, Sina, etc. That Form 67 is directory and not mandatory.
वो तो है judgment से.
तो
I know.
ये technical से direct को covered matter नहीं करता.
वो तो है ही, वो तो है.
Can you file any time before it is-
Actually, my case was 143(1) intimation. I filed a rectification. I had filed Form 67, but Section 90 की जगह 91 लिख दिया था. That was the difficulty. But I had returned the country Australia. सबको पता है उसके साथ treaty है. फिर भी गलती से 91 लिख लिया. Then of course there are these judgments. Commissioner says since you have filed an application under 154 and your application has been rejected, the 143(1) order merges with 154 order, and you cannot file an appeal against 143(1) intimation.
Oh. That's clear.
Commission, you can say. I think
वो
they
लोग को
are
disposal
glorified
चाहिए.
assessing officer. Many times you get many reliefs from the assessing officer than the commission.
Even CP Gram has worked in our foreign tax.
दे दिया.
6 बार रिजेक्ट किया, CP Gram में भी एक बार बोला रिजेक्ट किया, 10 दिन के बाद ऑर्डर आ गया रिफंड के साथ.
So only problem, I no tax officer is part of our study circle. Wipro will apply.
These are the facts, na, even if they are, they will improve.
So we'll have to apply Wipro
Okay.
in context of Form
Ah.
67.
After Sonakshi Sinha is considered Wipro.
It is considered Wipro.
They have considered Wipro.
OMR
Gopal
second,
has argued that case, they have considered Wipro.
Wipro also.
Ah,
तो ठीक है.
बॉम्बे हाईकोर्ट है सोनाक्षी.
Bombay Tribunal.
Bombay Tribunal.
And even thereafter also there are two other
Judgments.
It actually started from Brinda of Bangalore.
Bangalore ID.
So there are so
Vasudevan.
many appeals, so I have to keep track of everything.
Vasudevan.
Vasudevan was the first.
Followed by Chandra Pujari and Beena Pillai in Bangalore.
And then it,
एक जयपुर का है Sandeep Gosen का order है. Then this Mumbai Tribunal.
correct. There are now several, so we don't have to get into this technical way. There it covered.
Now, clause B. Earlier it says income assessed in greater than maximum or not chargeable tax where no return of income has been furnished. And if you see, or where a return has been furnished for the first time under section 148, this was introduced by Finance Act number 2 of 19 with retrospective effect from 1470. And the reason given in the explanatory memorandum is, however, these provisions do not contain the mechanism for determining underreported income and quantum of penalty in a case where person has underreported income and furnished the return of income for the first time under section 140. They say there is no mechanism and therefore we are providing this, which means in context of 153A and 153C, today also there is no mechanism. Because of their own reasoning for bringing this amendment. Now, coming to the next item is the issue raised by our convener. What if you were assessed under normal computation, you filed a return of income and you showed your income under normal computation. AO made additions and now you are assessed under MAT. पहले आपका normal tax liability 100 था. Now additions made by AO, increasing your book profit, and now your book profit is 120. MAT is 120. So now you have to pay MAT at 120 instead of 100. This is the issue. We'll go clause by clause. Income assessed is greater than. According to me, ABC will not apply because it does not deal with deemed total income.
Yes.
Coming to D, amount of deemed total income assessed or reassessed is greater than deemed total income determined in the return process under 143.1. Under 143.1, there is no deemed total income because it is under normal computation. Similarly, EF will not apply because the latter part is, E will not apply because you have filed a return of income. F will not apply because earlier you may have been assessed under normal computation, not under deemed total income. Therefore, in my submission, it should not cover a case where earlier you were taxed under MAT, under normal, and now it is under MAT. A reverse case.
No, but what would, in which circumstance, how will this practically as a whole?
We had one case where there was some deduction issue. So we had claimed that deduction in 1 month. It was in 271 month C era. Not in
Yeah, I'm not on the
So
penalty
we had-
part. I'm
we
on
had
the part
claimed
that
certain
whether
deductions from
really.
book profit, assessing officer had disallowed those deductions. So then the MAT increases.
In book profit, they had disallowed.
Yes.
For the purpose of calculating book profit, they had disallowed. Okay. So your MAT increases.
Yes.
All right. What exceptionally come out, huh? But
Take a reverse case. You were assessed or you had shown your income under book profit under MAT. And now it is under normal computation of income. Then DEF will not apply because DEF ka starting point is deemed total income, assessed or reassessed. Come to ABC, income assessed is greater than income determined in the return processed. This, according to me, is a broad section to cover because income assessed can be your 143, income assessed can be under book profit or it can be normal. Similarly, income determined in return process can be under book profit or it can be normal. But one can take an argument, since the book profit MAT computation has been dealt with separately in clause D, E, and F, therefore A, B, C should be constituted to only mean normal computation.
No.
Only normal computation. And now please come to clause G. Income assessed or reassessed has the effect of reducing the loss or converting such loss into income. Firstly, I cannot understand the English per se. How can income assessed or reassessed has the effect of reducing the loss or converting such loss into income? Compare this with explanation clause B to subsection 3, where an assessment or reassessment has the effect of reducing the loss. Where an assessment or reassessment has the effect of reducing the loss. It makes some sense.
Where
But
are you?
explanation to subsection 3, clause B.
Okay. Why it's not making sense to you?
An assessment has the effect of reducing the loss. How can an income assessed or reassessed has the effect of reducing the loss?
So here they use a proper language.
No, but does that mean clause G will apply only if you're otherwise assessed positively, but कोई एक loss जो set off नहीं हो सकता है वो कम हो गया. Example is a business income of 100. There's a long-term capital loss of 50. Which have reduced to 20. In this case, clause G will apply. Income assessed or reassessed has the effect of reducing the loss. Or take a case where you
Or
also
converting loss into
income. ठीक है, उस loss को income में convert किया.
अच्छा long term loss जो आपका 50 था उसको.
Does that mean there is a necessity to have a positive income for falling in clause G? Income assessed or reassessed? Compare the wordings with clause ABC. Income assessed is greater than income determined. Income assessed is greater than maximum amount not chargeable to tax. Income reassessed is greater than the income assessed or reassessed immediately before such assessment.
So I think your G के लिए ये explanation दिया है because they knew.
No, it is in subsection 3. G will explanation B will help me. Explanation B helps me.
We are taking a support.
Okay, so I think I am done with section 270, subsection 2. If there are any queries, I can take it up. I will move to subsection 3. Only if you fulfill the threshold of subsection 2, then you go to subsection 3. Otherwise, close the chapter and कुछ और पढ़ना शुरू कर दो. Subsection 3 determines how to compute your underreported. अभी ये भी एकदम कॉमेडी है. Amount of underreported income shall be either by virtue of clause 1 or clause 2. Then there is a separate mechanism provided in the proviso for the purpose of MAT, and there is a separate mechanism provided for in case of loss in the explanation. So there are 4 mechanisms provided. Clause 1, clause 2, 1 in the proviso and 1 in the explanation. Okay. Now, to give a brief before going into section, the difference between the income assessed and the income processed is the underreported income. So I personally feel they have brought a basket concept here, a wholesale concept in subsection 3. कि एक बार अंडर रिपोर्टेड इनकम हो गया, द डिफरेंस इज अंडर रिपोर्ट, उसके ऊपर हम पेनल्टी लगाएंगे. Even if your case falls in explanation, even if he may not have initiated on any issue, or he may initiate on one issue but drops on the same issue, still penalty is tax on underreported income. So what is underreported income? Difference between the assessed income and the returned income. अगर उसको ड्रॉप भी करना है, ड्रॉप अंडर सबसेक्शन 6. then only it will be reduced. Otherwise, पूरे पे penalty levy होगा. ऐसा reading. This is the reading of subsection 3. If I remember, there was a judgment of Ashwini Taneja while sitting in Bombay in the context of penalty, where he had dealt with this blanket or wholesale concept. And he stated that you cannot levy penalty on a blanket basis just because there is an addition. But now they have brought it in the statute by way of subsection 3 and subsection 2. Again, now we come to the second issue. Are all the mechanisms prescribed mutually exclusive or not? If I fall in clause 1, I cannot fall in the explanation. If I fall in clause 1, I cannot fall in clause 2. If I fall in proviso, I cannot fall in any of the other 3 mechanisms prescribed. According to me, the answer is yes. That all 4 mechanisms prescribed are mutually exclusive. If they are mutually exclusive, then please see what are the implications. In a case where an income has been assessed for the first time, if a return has been furnished, difference between the amount of income assessed and the amount of income determined under section 143(1). Again, here the issue will arise: what if the return of income has not been processed, or where a return of income is not capable of being processed, like return filed under 153A or 153C. Then there is no question of levy of any penalty. Two, in case where no return of income has been furnished.
So practically, can we ask that if we don't receive the intimation, we can ask that where is the intimation?
Yeah.
Whom to ask?
No, you can apply for an intimation.
Where?
CPC.
If it is already
Yeah.
processed, then you can ask. If it is not processed, then
No,
you
but
can-
then we can ask, there is a mechanism to write to CPC that give me the
it is
intimation.
available on your login. If it is already processed,
There
it
is
is
some
available.
Supposing if it is not available, then
No, still, I think you can ask, yeah.
can we?
No,
No, you can ask to provide, if it is there,
Grievance डाल दो
If
ना.
it is not there, if it is not there, and I have not received, if it is not available on the site,
many times it is not processed.
Okay,
then
then the point is they have time only till 9 months to process.
that's the reason I'm asking.
Abhi, case where return has been processed, goes to CIT, but it comes to tribunal. Tribunal says, I'm sending it back, you reprocess. Is it possible?
Reprocess? No, they cannot. do
Can
it.
they send back 141 intimations? Is the issue.
By way of order, yes.
Where
Why
is the
not?
time limit to process? Again,
Appeal के लिए भी extension है तो उसके लिए.
an assessment order under 143(3). I file an appeal to AO, CIT appeal to tribunal. Tribunal sends it back under 153. There is a specific time limit.
That's what I'm saying. Because of they
But
have
for
this
143(1), there is no time limit
There is no
prescribed. Similarly, 263 order, violation of natural justice. You go to tribunal. Tribunal cannot remand it back. It has to be quashed.
263 normally they are not sent.
We कितना matter send back कर रहे हैं? This is Delhi High Court judgment. Some turncoat or turntowne or something which says that it's a violation of natural justice. But today we cannot send it back because the time limit to revise has expired.
For 143(1).
Or 263. Similarly, 143(1). Suppose 143(1) they did not issue that proposal to make the adjustment, directly make the adjustment. Violation of natural justice, cannot make the adjustment. So in that case, tribunal is not bold enough to take the view, it has to go. So say we send it back. A, there is a time limit. B, who will do it? AO or CPC?
Other Ahmedabad tribunal has already said is that those provisos were not followed, the opportunity of. So
it has to go.
Very low, na? Exactly.
It has to go.
That what Dharan is saying, because there is no. time limit.
Yes, there's no, yeah. Dharan, you punishment.
Yes. 3(1)(b) says, in case where no return has been furnished or return has been furnished for the first time under section 148, then amount of income assessed in case of a company, firm or local authority and difference between the amount of income assessed and the maximum amount not chargeable to tax in a case not covered in item A. Therefore, item capital A deals with company, firm, and local authority. Item capital B deals with other entities. Because there cannot be a concept of maximum amount not chargeable to tax in case of a company, firm, or a local authority. Therefore, they are separately specified. But if we go to subsection 2, clause B and clause E, irrespective of the persons, irrespective of the nature of the person, they say income assessed is greater than maximum amount not chargeable to tax, or deemed total income assessed is greater than maximum amount not chargeable to tax. So can I say that 270A subsection 2 clause B and clause E only applies to an entity which is not a company, firm, or a local authority?
Clause B and
E.
applies to company. No.
So this is an argument which one can explore if one is caught very badly. Otherwise, not worth exploring today, as Mahendra Bhai rightly points out. But this is how the law is drafted. Which is why we are in practice. And it should be drafted in this fashion only, otherwise we lose work. Okay. Then clause 2 says, in any other case, difference between the amount of income assessed, reassessed or recomputed, and the amount of income assessed, reassessed or recomputed in a preceding order. Nothing new in this. Now come to the proviso. We have seen section 270A subsection 3, clause 1 and clause 2. How to determine underreported income is difference between if minus P. That is your underreported income. Now please come to proviso, which deals with computation of underreported income in context of deemed profit. Provided that where underreported income arises out of determination of deal total, where underreported income arises out of determination of deemed total income in accordance with the provisions of section 115JB or 115JC, the amount of total underreported income shall be determined in accordance with the following formula. The first point is proviso deals with computation of underreported income. Till the time we have not computed underreported income, how can one determine underreported income arises out of determination of 115JB or 115JC?
Right.
ये तो कुछ नहीं है, आगे फॉर्मूला देखो. तो the formula is A minus B plus C minus D. A is total income assessed as per the provisions other than the provisions contained in section 115JB or 115JC. B is total income that would have been chargeable had the total income assessed as per the general provisions being reduced by the amount of underreported income. We are finding out this underreported income. How can I reduce this underreported income while computing clause B? Formula is cyclical. Simultaneous equations has to be used.
Yes.
And underreported income can be in context of both normal computation as well as 115JB. दोनों को ऐड करके लेस करना है. So they use the word as reduced by the amount of underreported income. अब क्या हो गया? Problem ये हो गया that they have borrowed the formula from explanation to section 271(1)(c) और ऐसे का ऐसे without any changes चिपका दी. And concealment or furnishing inaccurate particulars of income को control F control R करके underreporting income कर दिया है. There the concept was under section 271. Penalty was to be levied for each specific item of addition. Each item of addition. But here the concept is entire basket is your underreported income. There is no question of finding out each income. So that entire formula is a complete misfit here. According to me, formula fails. If there is any addition in MAT, they cannot levy penalty.
Yeah, otherwise also, if it is on account of MAT, as you read earlier, clause D, E, F.
दोनों में अगर एडिशन हो गया तो आ जाएगा.
हाँ,
दोनों में अगर एडिशन हो गया तो आ जाएगा.
तो आ जाएगा.
One more point, as we have already discussed, that of course we have already discussed in context of subsection 2 that if there is no, if you have paid tax as per MAT, if you're ultimately assessed as per MAT, there is no difference. Even if there is a difference in the income as per normal computation, there is no underreporting of income and you cannot be brought to tax. Now, apart from this, also the formula uses the word total income assessed as per the provisions other than provisions contained in section 115 JB and 115A. There cannot be total income assessed under normal computation if you are taxed on book profit. Income assessed has to be your book profits. Therefore, even otherwise, A and B cannot apply. तो अभी मैट का फॉर्मूला देखिए मतलब ही नहीं है. The formula fails, there can be no penalty. Coming to the explanation. अब ये भी खतरनाक है. For the purpose of this section, a preceding order, Mahendra bhai, you are referring to preceding order word used in 3 clause B.
3 clause?
2, sorry. Subsection 3 clause 2.
Okay.
Now, what in case of a loss? What if your loss has been reduced or loss has been converted into income? Then it forms part of explanation B. In a case, how can firstly computation form part of an explanation? I don't know. एक बार चलो proviso में डाल दिया ठीक है. But explanation is something which is adding meaning to the section. It cannot bring out or carve out an exception. चलो फिर भी डाल दिया ये लोग को. In a case where an assessment or reassessment has the effect of reducing the loss declared in the return or converting that loss into income, the amount of underreported income shall be the difference between the loss claim and the income or loss as the case may be assessed or reassessed.
It has to be ideally a proviso and not a.
It has to be a proviso, yes.
Proviso.
But now the drafting is done by finance ministry, not by the law ministry.
That's a problem, actually.
जब से ये फॉर्मूला है ना A minus B plus C minus D, तब से समझ गया कि ये फाइनेंस मिनिस्ट्री ड्राफ्ट करती है.
नहीं जा रहा है अभी वहाँ पे लॉ मिनिस्ट्री में नहीं जा रहा.
नहीं दिख ही रहा है ना सर कैसा.
There is no law.
Sorry?
There is no law.
But there is a minister.
He speaks.
Yes. Okay, now we come to the explanation. Now, please see what are the implications of this. We have seen section 270A, subsection 2, clause G. Income assessed or reassessed has the effect of reducing the loss. One of the interpretation is there has to be a positive income and there has to be a loss which cannot be set off. Then only that clause will apply. Assuming for a moment, clause applies even in a case where it's a loss return, either the loss is reduced or loss is converted into a positive income. And how to compute underreported income is explanation clause B. In case an assessment or reassessment has the effect of reducing the loss declared or converting that loss into the income, the amount of underreported income shall be the difference between the loss claimed and the income or loss as the case may be assessed or reassessed. Underreported income is difference between loss claimed and the income or loss assessed or reassessed. Example, I have claimed a loss of 5 lakh. उन्होंने बोला 2 lakh loss. 3 lakh is my underreported income. I have claimed a loss of 5 lakhs. They have converted it into income of 5 lakhs. I have to reduce 5 lakhs from 5 lakhs. The answer is 0.
No.
No,
10 lakhs.
10 lakhs, yeah.
Amount of underreported income shall be difference between the loss claimed 5 lakhs and the income or loss as the case may be assessed or reassessed.
It is a difference.
-5 +5.
To ignore the signs. It's a difference between amount of loss claim
Yes,
minus amount of income assessed or reassessed.
right, right. They should have given here A plus B. In the report, not there now.
So 10 lakh का loss और 3 lakh का income हुआ तो you need to say कि the difference will be
7 lakhs. इसलिए मैंने 5 और 5 दिया कि 0 हो रहा है. That attracts. There's one more issue. My income is 1 crore business income. Loss is 50 lakhs long-term capital loss. Loss has been reduced from 50 lakhs to 30 lakhs. 1 crore remains as it is. Income assessed and income determined remains same. Assuming I fall in clause G, therefore it's underreporting of income. How to compute underreporting of income?
Yeah.
Will I go to 3(1)(a)(a), 3 section 270A subsection 3 clause 1 item A, or will I go to explanation B? If I go to 3(1)(a), income assessed, income process is same, no underreported income.
B.
But according to me, I fall in B because it says it has the effect of reducing the loss declared in the return or converting the loss into income. Ultimately, it may not be a loss return, but it has the effect of converting. Then the difference is the underreported income. But take a case where 1 crore income has been increased to 1 crore 20 lakhs and loss of 50 lakhs has been reduced to 30 lakhs. दोनों जगह एडिशन हुआ है. अब मैं कहाँ जाऊंगा? 3(1)(a)(1), 3(1)(a) और एक्सप्लेनेशन बी.
तो ए में जाएंगे आप.
तब तो ए में जाऊंगा तो दिस इज नॉट एन अंडर रिपोर्टेड इनकम, और अगर एक्सप्लेनेशन में जाऊंगा तो दैट इज नॉट एन अंडर रिपोर्टेड.
करेक्ट. एक जगह पे स्किप हो जाएगा.
Again, it is so we discussed earlier. It's a mutually exclusive provision. तो एक जगह पे स्किप होना चाहिए. Also, one more issue here is my income is 1 crore, but I have brought forward loss of 5 crores. Therefore, assessed income, retained income is 0. They made an addition of 1 crore rupees, or they made an addition of 2 crore rupees, but again, there is a brought forward loss of 5 crores. Because therefore, the assessed income still remains 0. There is no question of any underreporting of income because my income assessed is same as income processed. शर्मा जी कुछ क्वेश्चंस नहीं है ना? बोलो ना, बोलो ना. Sorry, one more question. I have offered my income as short-term capital gains 111A और long-term capital gains 1038 नहीं apply होता है. AO says this is your business income. Income of 1 crore remains income of 1 crore. There is only change in the rate of tax.
No penalty.
Merely change in head of income. Of course, we have judgments, but वो भी formula में ही नहीं बैठ रहा है. इतना compartmentalize कर दिया है, that is better for us. And
it was the purpose of research. Mentioned that how why they brought 270 on 1C was settled, but now we have all these plannings.
But their object of achieving certainty is not achieved.
Litigation will reduce from particular 270.
Or I reduce because they are initiating for misreporting.
Subsection 4 and then Delhi High Court and those up.
मेरा 5 pending है Bombay High Court में on the basis of Delhi High Court. But the problem is you have to go to High Court. Where is the litigation ending?
Yes, it is not ending. In fact, it is increased.
And I'll tell you, I argued this matter before.
Under reporting है तो भाई
तो खत्म होता है, तो खत्म होता है.
Under reporting order आई जाता है. Misreporting subsection 4 का करके then Delhi High Court. बड़ा अमाउंट है तो धारन को आप कर लेगा, छोटा हम लोग कर लेंगे.
सर मैंने छोटे अमाउंट के लिए भी मैंने ट्राई किया. I went to the Pune, I told you, Pune tribunal. I argued before the Pune tribunal. I said, sir, not everybody can afford High Court. You please interpret this harmoniously. He's saying initiation of penalty is premature at this stage. I said it used to be premature because 270 on 1C made there were no consequences flowing from initiation. Now the consequences flowing from initiation is immunity under section 270A as well as prosecution. So whenever you please, not everybody can go to High Court. You please interpret this that the penalty has been wrongly initiated for misreporting. It should be under reporting. Send it back to the AO.
But in the quantum appeal, you will argue.
In the quantum appeal.
Quantum appeal, you argue.
Penalty levy हो गया तो immunity का तो question ही नहीं आ रहा ना सर. Quantum appeal में argue करना पड़ेगा.
That's why you need immunity.
तो quantum appeal में ही argue किया मैंने.
That is what I'm saying.
Initiation I argued in quantum appeal.
This is why they say it is premature. No.
Now it is not premature. Now there is a consequence flowing from initiation of penalty. They cannot say it is premature.
Sorry.
There is a consequence flowing from initiation of penalty, which is my immunity. Therefore, they cannot say it is premature.
So what was the judgment?
Judges were not open to the arguments. They say they asked me to withdraw the ground. I'll argue before some other good bench. The problem, I gave them a solution also. Let's see, one of the conditions of section 270AA is I should not file an appeal. I already filed an appeal.
You should discuss this when you're discussing misreporting.
I'll discuss this. But अभी छेड़ ही दिया है बात. खत्म कर देता हूँ.
Start. One
of the conditions is filing of appeal. I said I already filed an appeal. Therefore, I have audited section 270AA. The solution to this is you send it back. The direction it is under reporting. Once you send it back, against that order, I will not file an appeal and I can claim an immunity.
But then the one month time limit.
From that date, from the date of the set aside order. Okay. Now we skip subsection 4 and subsection 5 for a moment because it deals with addition made in earlier year, no penalty levied in earlier year. This year there is some investment which I have made and I claim the source is in respect of that. So very rare case में होता है. Already it was covered in explanation. Also the section explanation 2 to section 271, which I am been told by Advocate Devendra Jain that explanation 2 to section 271 is one single statement. There is no full stop. Explanation 2
sentence.
ये explanation 2 यहाँ से start होता है यहाँ खत्म होता है. ये one single statement है.
This is what law minister does. Law minister में ये problem है.
और he had also made a word count in word. तो कुछ तो 200-300 word add. Now they have broken up. To that extent, there is some certainty. Okay. Now we come to subsection 6. Subsection 6 deals with exception to underreporting income. The underreported income for the purposes of this section shall not include the following. Now, I don't know why they have written the word for the purposes of this section, because one is also prosecuted under section 276C for underreporting income. They have made an amendment to section 276C, willful attempt to evade tax, penalty, interest, or underreports his income. He is subject matter of prosecution. Exception is only for the purpose of this section. This is one of the interpretation, but it should not be. Once it is not underreported income, penalty is not leviable. Once penalty is deleted, Supreme Court in KC Builder has held that prosecution cannot be continued. Now, as we have already discussed, the whole approach has changed from item-specific penalty to a basket approach. So first you determine the underreported income being the difference between your income assessed and the income processed. वो amount आने के बाद आपको कुछ item reduce करना है under subsection 6. Now, what are those items? The first exception. Also, we have discussed in context of 270A subsection 1 that it's a discretionary power. Therefore, even if I don't fall in subsection 6, still they have a power to not levy penalty. So irrespective of if I am falling in the explanation or not, I may still be out because of subsection 1 discretionary power. For discretionary power, very rarely discretion will be exercised in favor of the SSC, but we hope that the appellate authorities will exercise the discretion in favor of the SSC. To give an example, if there is a debatable issue, then we have Bombay High Court judgment, Nayan Builders and all other judgment which says the penalty cannot be levied. If you strictly read section 271, there is no exception called debatable issue. Second example, you have taken a legal opinion कि ये बरोबर है. Addition हो गया, you did not contest and the penalty has been levied. In the context of penalty proceeding, you say I have a legal opinion of a senior advocate and therefore I have bona fide belief. Strictly speaking, there is no particular exception कि अगर legal opinion है तो तुमको तुम्हारे ऊपर penalty नहीं होगा. But the courts have interpreted. Or for example, PwC का case था, genuine or bona fide mistake.
That is an exception. I hope.
It's followed subsequently by Bombay High Court. Supreme Court.
Then
Subsequently followed by Bombay High Court, Bennett, Coleman, so many other judgments. And if it's a bona fide, genuine mistake which is proved, then no penalty has to be levied. These of exception are not forming part of the act. They have been created by law so that penalty is not saddled unnecessarily on any assessee. So even if my case is not falling in subsection 6, still I can rely on this judgment. Is my humble opinion. I can still rely on debatable issue. I can still rely on legal opinion. I can still rely on bona fide mistake.
Because of the word may in subsection 1.
but only because of that word may. But then again, shall and
Of course, that all these exceptions also forms part of clause A, which we'll read now. Amount of income in respect of which assessee offers an explanation and A or the Commissioner of Appeals or the Commissioner or the Principal Commissioner, as the case may be, is satisfied that the explanation is bona fide and the assessee has disclosed all the material facts to substantiate the explanation of 3 simultaneous conditions. A, I have offered an explanation. My explanation is legal opinion. B, AO, Commissioner or Commissioner Appeals, etc. is satisfied that the explanation is bona fide. ये हम मान लेते हैं कि AO ने बोल दिया bona fide है. And the assessee has disclosed all the material facts to substantiate the explanation. I have disclosed the fact in my PNL, in my 3CD, in my reply to show cause, in my reply to 142.1. I have given the legal opinion. There is nothing which is beyond all this information which I have provided, which has been used by the AO to make the addition. If that be the case, no penalty can be given.
so you mean to say all these 4 things, whatever you said,
To be
assuming
satisfied
all that should be at the assessment stage.
at the penalty stage
Penalty.
Yeah.
while leaving penalty. This clause A is somewhat borrowed from
Explanation 1.
compare with clause B of explanation 1 to section 271, but there is a stark difference there. There I had to satisfy one of the 3 conditions. Here I have to satisfy all 3 conditions. We'll read that. Where in respect of any facts material to the computation of total income of any person in this act, A or B, such person fails to offer an explanation or offers an explanation which is found by the AO or the Commissioner to be false. So if I fail to offer an explanation, or if I have offered an explanation which has been found by the AO to be false, then penalty is to be levied. See clause B. Such person offers an explanation which is not able to substantiate and fails to prove that such explanation is bona fide and that all the facts relating to the same and material to the computation of total income have been disclosed by it. It is negatively worded and the onus is on the assessee. Again, I'll read. When in respect of any fact material to the computation of total income of any person in this act, a person offers an explanation which is not able to substantiate and fails to prove the explanation is bona fide and all facts relating to the same have been disclosed, then the amount added or disallowed is deemed to be income in respect of which particulars have been concealed. Only if 3 conditions are fulfilled. What are the 3 conditions? I offer an explanation which I am not able to substantiate. Suppose I offer an explanation I am able to substantiate, it is not deemed to be a concealed income. I offer an explanation which is not able to substantiate and I fail to prove that such explanation is bona fide. If I prove that the explanation is bona fide, then again it is not deemed to be income in respect of which particulars have been concealed. The 3rd condition, and that all the facts relating to the same material to the computation have been disclosed. If I disclose all the facts, then again one of the 3 conditions have not been fulfilled and therefore again it is not deemed to be concealed. Point I am trying to say is, earlier the explanation 1 clause B had 3 conditions to be fulfilled. If one of the 3 conditions is not fulfilled, it is not deemed to be concealed income. But under section 270A, I have to prove 3 conditions to prove it is not under reporting of income. So the role has been reversed. Second, third, exceptions deal with estimation. Amount of underreported income determined on the basis of an estimate. So firstly, the condition has to be determined on the basis of an estimate. If the accounts are correct and complete to the satisfaction of the AO or the Commissioner of Appeals or the Commissioner of the Principal Commissioner, as the case may be, but the method employed is such that the income cannot be computed properly, reduced therefrom. If an addition has been made on an estimated basis and if your books are not rejected, no penalty can be levied. amount of underreported income determined on the basis of an estimate. For example, bogus purchase. 12.5 टका ऐड कर दी. If the accounts are correct and complete to the satisfaction of the AO has not rejected your books of accounts, as the case may be, but the method employed is such that the income cannot properly be deduced therefrom, then no penalty can be levied. So estimation, books not rejected, no penalty can be levied. Third exception, the amount of underreported income determined on the basis of an estimate. Again, it starts with an estimate. If the assessee on his own has estimated a lower amount of addition or disallowance on the same issue, has included such amount in the computation of his income, and has disclosed all the facts material to the addition or disallowance. Again, three conditions: A, addition on an estimate; B, my estimate is lesser than their estimate, and I have included such issue in the computation of income, and all facts have been disclosed. I have suo motu disallowed under section 14. They increase it. It cannot be subject matter of penalty. Motor car accidents.
Yeah, normally estimates.
Even according to me, 50C, 43CA, 56 to 10 addition made, they cannot levy any penalty because it is my estimate that this is the fair market value.
Where is your estimate in that?
Yeah.
Once I offer the consideration to tax, in spite of 50C, 43CA, 56 to 10, it is my estimate that this is the correct fair market value. I have added to my total income. I have disclosed all the facts.
But provided that it is different from your agreement value?
Agreement value मैंने offer कर दिया.
That
is my estimate. कि ये बरोबर fair market value है.
That is your agreement. You have not considered the fair market value.
I have not considered stamp duty value.
That is the fair market.
That is not the fair market value.
Suppose.
Fair market value is to be computed by the DVO.
That's provided you go for an objection and all that.
Even if I don't go for an objection,
Kolkata
according to me, Madan Theatres, Kolkata High Court. According to me, if I offer to tax 50 lakh rupees,
as per the agreement,
consideration,
and
in spite of the fact that ready reckoner is 70 lakh rupees, they make an addition. There is no, my estimate is 50, your estimate is 70.
You mean to say you have estimated that as 50?
Fair market value. I have estimated it to be fair market value. There is a Madras High Court, Karnataka Madras High Court, which says when there is a difference, you have to automatically refer to DVO, irrespective of the fact.
I am aware.
So according to me, all these cases will be excluded.
No, he's saying stamp duty value is also true fair market value. That's what
I'm trying to say. Which he is trying to say agreement value is the fair market value.
So my estimate and department estimate. Let me also bring to the members' notice a recent judgment of the Supreme Court. It is a fantastic judgment and which one should use. It is in context of Land Acquisition Act.
Yeah.
Yes. Yes.
Where the court says,
we discussed that.
where the court says that,
Which is that?
I'll just share the citation. Judgment by Justice Honorable Justice M.R. Shah.
Exception.
No, not an exception.
Right?
Under Land Acquisition Act, a person was awarded compensation say 100. He said इसका stamp duty value 1000 है, मेरे को 1000 दो.
Oh.
Okay.
इसके लिए not exception. You are right.
इसको अपलोड मत करना वीडियो.
नहीं.
Bombay High Court says stamp duty value 1000, उसको 1000 दो. BSNL और MTNL था, which went in appeal to Supreme Court. Supreme Court says no. Ready reckoner value is not the correct fair market value. It is a value for the entire area, ignoring the peculiarities of the plot or the flats involved. Therefore, it cannot be considered to determine the fair market value in context of Land Acquisition Act. BSNL is a central government entity. The central government takes a stand in Land Acquisition Act. They cannot take a contrary stand in 50C, 43C and 56 to 10. करेंगे इसकी भी झगड़ा करेंगे.
चालू है ना इसमें we can use this.
100%. So these are the examples which I feel we fall in clause C, where I have estimated myself. Only point is, I estimated BSNL or BSNL ऐसा कुछ था. I estimated a lower amount of addition or disallowance on the same issue. If I say 0 and they say 10 lakhs, does that mean I have estimated a lower amount? अगर मैंने 1 किया और उसने 10 लाख किया, then I have estimated something and they have estimated something. But if I say no disallowance, 0 means no disallowance. Then can they say it's an estimated a lower amount? C.
Has to have some basis.
I have some basis. There is some basis. There is no doubt.
For zero also.
For 0 also there is some basis. But the wordings are estimated a lower amount of addition or disallowance on the same issue, and has included such amount in computation of his income.
So you are
Because
saying
less-
0 is also lower.
I'm not saying. I'm proposing this.
Yeah, in your example.
Yes.
Okay. No. कुछ estimate कर देने का to avoid.
₹1.
हाँ.
Then his point is it has some basis.
Basis.
And the basis is because 270A 6C में explanation में मेरे को call करना है.
No. Basis of estimate is important, not basis why you are doing.
Okay. And the last exception is in relation to transfer pricing, which says the amount of underreported income represented by an addition made in conformity with the arm's length price. So if there's a TP addition, provided that assessee has maintained the information, documents as prescribed under section 92D, declared the international transaction under chapter 10, and disclosed all the material facts relating to the transaction. Now, I am not able to gather the meaning of the word declared the international transaction under chapter 10. So according to me, should be declared in the form 3CEB. उसके लिए पूरा chapter 10 बोल दिया वो लोग ने.
उसमें आ गया ना.
Declaration as an international transaction can be otherwise also.
How? Other than TCED?
I am showing it in the course of assessment proceeding. ये by international transaction. Do not disclose in this.
But they are supposed to have some record.
Record है मेरे पास. International transaction का सब record है मेरे पास.
TP study लेना था.
TP study report भी है मेरे पास.
So 92D में खाली वाले का. Other international transactions are not covered. Declared the international transaction.
Declare the international transaction under chapter 10, which the logic says that it should be in form 3CEB. It cannot be otherwise. But somebody can take this view if there is any other declaration possible under chapter 10 other than form 3. Study report में लिया 3CEB में नहीं लिया possible.
But generally by improbable, but possible तो कुछ भी है. But all I am saying is, but then that will have other penalty consequence.
For transfer pricing. That is more harsh again.
Okay.
2%.
Provided it is an ठीक है. Out of abundant, mostly I think people report the transactions out of abundant caution. We are reporting this transaction, though it is not an international transaction. If I remember correctly, Vodafone के time पे was 368 ITR1 that share premium. They say it's not an international transaction, but out of abundant caution we are reporting it.
So Bombay High Court, they came out with a circular also.
Before that.
Correct. So all I am saying is report करने वाला था ना.
No, circular says you cannot make an addition, but that does not absolve you from reporting it in the form 3CEB.
Then it is academic. If because of the circular, I mean,
2% लग सकता है कि नहीं फिर? 2% लग सकता है कि नहीं?
2% is on transaction line.
Becomes academic. If there is no tax consequence, then there should not be penalty. ठीक है?
ये तो सर still में fall
Penalty. अच्छे ने section 2 से शर्मा जी की.
Yeah.
अच्छा, you have already taken for
Yeah.
Section 27 and the third exception is if the undisclosed income is referred to in section 271 AAB. AAB is a search provision. Also, if any addition is made under section 271, penalty is levied under section 271 AAC in respect of additions made under section 115, 68, 69 taxes levied under 115 BBE. Then 271 AAC subsection 2 says that it will not constitute underreporting of income.
Okay, there it is.
There it is written. The penalty to be levied, they have removed the discretion. Now the penalty to be levied is 50% of the amount of tax payable on the underreported income. Now we are left with misreporting of income, computation of tax payable on underreported income, immunity under section 270AA. And apart from that, I have some issues that we can discuss. The issues are whether the old judgments can apply under the new law or not. that we can.
Yeah. The Supreme Court judgment members are.
Nita.
Physical as well as virtual. We discuss further.
एक मिनट, I'll just mute myself. Then you can speak, Sharma ji.
Yeah.
Yes, so the question is, if the show cause notice is silent about underreporting, misreporting, does it mean that there is no recording of reasons or against natural justice? I will not say it is against natural justice, because if there is violation of natural justice, it will lead to set aside, not costing of proceedings. Courts have held it to be one of the jurisdictional requirements to initiate penalty on one or the other ground, or to intimate the assessee what he is supposed to reply to. If I go to judgment of Bombay High Court in case of Mohammed Farag, now underreporting and misreporting are two different concepts. This I was supposed to take in the misreporting of income. Even in misreporting of income, there are 6 clauses. Under which clause I fall, that he has to specify in the notice. If he is not intimating me that it is misreporting on account of clause A or clause B, in that case, the show cause notice is not valid, and therefore the entire penalty proceeding has to go.
But that's the same thing for that. Underreporting also clauses are there.
Underreporting is a difference.
What?
That you can take a view that even for underreporting of income, he has to specify which clause, how much underreporting, this, that, etc.
How much will बाद में आएगा, but which clause तो डालो.
Yes, but how much ही आएगा ना, because underreporting of income is difference between this and that.
नहीं, मैट है या उसका है तो there are.
Yes. But at least in case of misreporting, my personal view is he has to write which clause of misreporting, not only misreporting, but which clause of misreporting, to put it to the assessee कि हमको इसके ऊपर आंसर देना है. In fact, in the Delhi High Court, in the case of Schneider Electric 443/186, in context of challenge to the disallowance of immunity under section 270AA, has referred to this aspect and say that the show cause notice is not even mentioning underreporting or misreporting.
Show cause notice never mentions regarding.
Mention करता है.
Mention तो करे. Somebody तो दिया. No, they even mention misreporting है तो they even mention misreporting. The question raises. But you have not addressed his question. You have even done a fine tuning of his question.
No, I am saying if the show cause says initiated for underreporting of income, Then he has to specify which limb of underreporting. If show cause says initiated for misreporting of income, then he has to specify which limb of misreporting of income. If the show cause says underreporting or misreporting, in तीनों case में penalty जाएगा.
So you mean to say it's not what we say set aside case also?
Quash. Because of Mohammad Farhan, Bombay High Court full bench. I'll just read one or two findings of
What
the
is
High
the
Court.
citation of Mohammad Farhan?
वो भी दे देता हूँ आपको. The question before the court was whether merely not striking off the irrelevant thing in the show cause notice, though in the assessment order penalty has been initiated on one of the aspects, will be fatal. The answer is yes. The primary burden lies on the revenue. In the assessment proceeding, it forms an opinion prima facie or otherwise to launch penalty proceeding against the assessor. But that translates into an action only through statutory notice under section 271(1)(c) read with section 274. True, the assessment proceeding forms the basis for penalty proceedings, but they are not composite proceedings to draw strength from each other, nor can each cure the other's defect. A penalty proceeding is a corollary. Nevertheless, it must stand on its own. These proceedings culminate under a different statutory scheme that remains distinct from the assessment proceedings. Therefore, the assessee must be informed of the grounds of the penalty proceedings only through statutory notice, and omnibus notice suffers from the vice of vagueness. More particularly, a penal provision, even with civil consequences, must be construed strictly, and ambiguity, if any, must be resolved in the affected assessee's favor. Even the Dilip N. Shroff's case disapproves of the routine ritualistic practice of issuing omnibus show cause notices. That practice certainly betrays non-application of mind, and therefore the infraction of a mandatory procedure leading to penal consequences assumes or implies prejudice. As a result, we hold that Dilip N. Shroff's case treats omnibus show cause notice as betraying non-application of mind and disapproves of the practice to be particular of issuing a notice in a printed form without deleting or striking off the inapplicable part of that generic notice. The main point is assessee must be informed of the grounds of the penalty proceedings only through a statutory notice.
Which means even for misreporting also.
To specify, yes, it has to be specified.
This can squarely apply.
It has to be specified because
We
all
have
are
discussed this in our one of
Yeah,
the study group.
Study
meetings.
group meeting we are.
it has to be because all six are different. Supreme Court in Ashoka Pai, Dilip and Shroff, and the Karnataka High Court in that Manjunatha portal, they say that furnishing of inaccurate particulars and concealment of income are two distinct things mutually exclusive. Therefore, you specify 270A, 9 plus A2F are all distinct things. You specify what is there. इसके अलावा और भी आएगा what if in some cases penalty has been initiated for underreporting and in some cases it has been initiated for misreporting. कैसे penalty लेवी करने का because underreported income is only one figure. So वो सब we'll take it up in the next